Hello, everyone. Happy Wednesday. This is Simon with AvaTrade, and we're about to start our webinar, Interactive Trading Conversations. Just want to share with you a few things about myself. I'm one of the senior account managers at AvaTrade, and I started to trade in June of 2000. Makes it over 24 years. It went by very fast. So the first 11 years of my career, I was a prop trader licensed in New York City. And I did it for about 11 years, and after that, I moved away from the intense day trading environment, and I continued to trade and started to mentor and educate others. And I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. So I see some new faces, so it's very important to understand what we do here. We come here to ask specific questions about markets, and that was the whole idea why I came up with this webinar, because we do have a lot of amazing webinars where we present the material to you, and then we'll leave a little bit of time for questions sometimes. Here, the podium is yours. You come here with the specific questions on any tradable instruments, assets that we offer, and then we'll discuss it together. So you ask questions, the way you ask questions, you type it the same way you confirmed hearing me. You just type the question there, and I'm going to read that question. Anybody has anything to add or to comment on those, I'll read that as well, and then we'll take a look at the chart and trying to understand what's happening in that specific instrument. Also, if I know any fundamentals, I'll be happy to share them with you as I cover a lot of markets. Risk warning, you can find the full statement at avatrade.com. Of course, everything we do here is purely educational. We do not suggest any trades. Social media, you have Telegram, you have X, and my favorite, as I always say, and I keep on saying, in the YouTube channel, you can find a lot of information. Please follow us, subscribe. If you are watching this on YouTube, write your questions or comments if you have any. Don't forget to click likes. And so I guess somehow the algorithm will make it available for more people to watch, okay? And of course, feel free to share with people that you think might benefit from it. Okay, so also we started a few weeks back, people sending questions before the webinar. So I took it as people are warming up, because for some reason, you guys are an amazing audience, but sometimes you just hesitate to ask questions. So while we answer these questions, you can prepare yourself and start typing the questions into the window so we can address. Now, again, we have up to an hour. Sometimes we manage to do the full hour. A lot of times also we run out of questions. Audience is feeling shy sometimes, or whatever reason is. I'm still trying to figure it out. And so that means that sometimes we finish earlier. Okay, so let's start with these questions. These are great questions, I think. And I'll start with the first one, China's economic recovery. With China implementing new stimulus measures, do you foresee opportunities in Asian markets or commodities tied to the growth, such as copper? This is a great question. I think we address it in a few webinars as well. You know, I'm going to bring the chart and show the price action on Chinese index, so we'll be understanding it better with the visual. You see, somewhere here they announced a lot of stimulus. They tried before, but this was a big thing, including injecting funds into the economy. Also, they were changing regulations for the banks. The banks didn't have to have such a huge holding of cash to cover the deposits. So, and other things happening. So it was somewhere, according to this, the big move started September 24th. So as you could see, in 2 weeks, we moved tremendously. And I shared this in some of my webinars. We actually reached a level of years back. If you can take the peak of this move, it takes us back to year 2021. Right? So we had 2 big weeks to the upside, a lot of reaction. I think a lot of short covering was happening there, so they squeezed the shorts. And And then in 2 sessions following that huge bullish move, we actually raised exactly 50% of that move. So then we were zigzagging a little bit. We tried to move up again. Very next day we raised it and we're slowly stepping down. So of course, Trump's victory on the U.S. elections didn't help China a lot, because he's all about posting tariffs on China, increasing it, because we already have tariffs on China goods coming into us. So as you could see here, so far we had this double bottom here at around 12,900. Currently, today is the green day for China. So if you watch my webinars before, you know that with China, I usually bring 4 instruments up, and that's copper, oil, and 2 currency pairs, which they call them commodity currencies, which is Australian and New Zealand dollar, right? So that's pretty much what it is. So let's see what China is doing. Based on that, we could actually see. We can start with copper, which was part of that question as well. As you could see here, copper had a nice move, and then we came back and we start from scratch again at this level at 405. As we had a nice move here, slowly we went lower, we retested this, you can say, the triple resistance here, triple top, moved lower, held the support. So in the big picture, we kind of between 405 and 444, as this is being the resistance and this is being the support. So it depends what China will be doing. Definitely copper will be reacting to it. So this is one. Crude oil. It's hard to judge the crude oil here, because it did react to China both up and down. And also it's very sensitive to the situation, which is going to be one of the questions there as well, with the geopolitics, with the Middle East. So as you could see here, it's a diversion. As China is going up today, crude oil is going down, and I'll be talking about the situation in the Middle East in the next question. So that's oil, and here you go, Australian and New Zealand dollar as well. They've been, of course, they've been reacting, of course, to the strength of U.S. dollar, but to China as well. So this is Aussie, and this is a New Zealand dollar, which is actually reacting to China. As you could see here, also reacts to dollars. Dollars selling today. So those are the things. If you are following China, you have copper, you have oil, you have those 2 currencies, and of course the individual stocks. One is the famous one is Alibaba, which goes together with the market. Actually, I have it here. You could see it had exactly the same move to the upside. Let's see if it matches the year 2023. So we hit the level of 2023, and then we retraced, and the reaction was stronger to the downside than the index itself, and we stopped right on the 200 moving average. I'm sure there's more Chinese companies there. I'm not specializing in those, so I'm not going to pretend I know, but Alibaba, nobody knows. Everybody knows. Some people shop on AliExpress, including myself. So that's China. Good question. And let's read the next one. Cryptocurrency trends with regulatory updates and market sentiment shifting. What's your outlook on Bitcoin, Ethereum in the near terms? You see, this is the thing with the cryptocurrencies. Like I said, I've been trading for 24 years, and back then we didn't know about cryptocurrency. And we trade traditional instruments, individual stocks, indices, and so on. Bitcoin and Ethereum or any other cryptocurrencies, it's a different era, different world. And obviously people are making a lot of money. And at the same time, a lot of people that entered the wrong time at the tops suffering the corrections as well. But the key word here is the regulatory update. So the same thing with Trump coming on January 20th, taking the position as the president in the White House. We know that he's going to support, just his sayings before even he becomes a president. He's very supportive of cryptocurrencies in general. So, as you know, since he won the elections on the 5th of November, we had a huge boom on cryptocurrency years ago. On the 6th, starting the 6th of November, we came from 67,000, hitting almost 100,000 right here, 99,726 here. So as we got closer to 100, we did have corrections, but take a look today. We are moving higher. The weaker US dollar is showing it as helping it as well. So a big picture, the environment probably will be a very positive for cryptocurrencies, especially the major ones like Bitcoin and others. And in the positive environment, the growth is possible. So a lot of big names are really betting on Bitcoin. Cathie Woods, she's one of them, holding huge amount of shares. Huge amount of sorry, not the shares, but coins. And in general, we see the tendency is very, very positive. Good question. Now, here we come to geopolitical risk with ongoing tension in the Middle East and the impact of global oil supply. How might this affect energy markets and broader indices in the short and medium terms? So this is what I meant by speaking of oil. You see, 80s, 90s, beginning of 2000, where we had crisis in the Middle East, oil was jumping like crazy. So this time we thought the same thing would happen, but it actually didn't. We did have few reactions, definitely. We had the reaction here when the Russia-Ukraine war started, that's for sure. And initial reaction Middle East when October 7th of last year happened. Let's see. We could see any specific move here. September. Well, interestingly enough, oil went down. So, as I said here, oil is not acting in the same way. So, in the past, we're talking about decades ago, there was a fear of supply every time there was anything happen in the Middle East. And these days, a lot of countries are contributing to oil, including United States, Canada, Norway, UK, and other places. Of course, there are a lot of countries in the Middle East. There's OPEC, there's Russia. So I think the good thing just happened that there's a ceasefire as of this morning between Hamas and Israel. So they announced 60-day ceasefire, and hopefully it will create some peaceful situation here. So with that, we already saw the reaction on oil, as you could see here, to the downside, and we might continue sliding and retesting the 66, 67 area. But again, every product, including oil, has two sides. There's a supply and demand. So the geopolitical situation definitely is affecting the supply of oil, right? But demand comes from China, comes from global economies, and let's see how oil works with it. Now, if you take natural gas, I still didn't figure it out since the war, Russia-Ukraine, things are kind of reshuffling, right? Europe was heavily dependent on Russian gas, and then since the war happened, they transferring or resetting things to be using the gas from U.S. that's being brought there and other things. So things are changing, right? And geopolitics has a huge, huge effect on everything, including the energy. So that's as far as the question says here, short and medium term, I really don't know how to differentiate it anymore because the time is so fast. So whatever used to be medium or long, it still becomes short. And I don't mean to be philosophical here. we live in a very dynamic environment. Things are changing overnight. So we'll see what happens and how things are going to play. And of course, the first step to it will be the President Trump assuming the office, or assuming the position, taking the office. I don't know what's the correct way of saying it. So definitely we're going to see a lot of things, including tariffs. It's been talking about lately. Tariffs from Mexico and Canada, increasing tariffs for China, and definitely he wants to pump a lot of oil, so that would affect also the oil to the downside price probably. It's going to be interesting. Okay, fourth question is more of a psychology here. How can traders prepare mentally for a week filled with high-impact economic data and avoid impulsive decision making? I think it's an easy question, and at the same time is a complex one, because if you just take this part here, the week filled with the high-impact economic data. This week, for instance, also we had inflation data today. On expenditure, we had GDP, we have durable goods, we have decision of interest rate from New Zealand and other things, Japan, speeches, other things. Every week he has a lot of things. So this is just part of it. That's easy. You just look at economic calendar and you prepare yourself, you make notes, and you can actually choose when you want to trade, what you want to trade, and how. But I think traders' psychology, it's much, much deeper, and it's not just with economic. Preparing yourself, and I share with you my experience. My big losing days are happening when I'm not prepared, and in addition to that, I could be tired, or not feeling that great, not focused, and so on. Those are dangerous days to trade. So some traders actually, when they wake up in the morning, they didn't sleep enough, they didn't prepare a plan, or at least some ideas. They really stay away. They go play golf or whatever they do, play with the kids. But trading is it's like anything, like serious business, like being a doctor, surgeon, or engineer. You have to be precise there. You have to have a plan. You have to have a clear mind. You have to be in control. I have a friend who's an amazing trader, Alex. We used to trade together on Wall Street. I met with him after not seeing him probably for 20 years. He's still in New York. So I met with him 4 or 5 years ago in Moscow, actually. He was teaching a seminar there. And he was saying at the seminar, and that's one of his favorite sayings. He says, I wish you that, it's a good kind of wishing someone good things, like a toast. I wish you that your hands would be doing what your brain is telling them to do. And I think it's an amazing thing if you think about it, because if you've been trading for a while, you know that sometimes your hands are entering the trade, and then you're surprised, you're feeling shocked. So why did I just do it? Who did it? Who pressed the button? And I just out of curiosity, if anybody in the audience ever experienced it, just type plus sign into the window, just to see that I'm not alone with these things. So that just shows that if you're not organized, if you don't have a plan, your trading could be reactive and impulsive, and most likely not productive. So I don't know, I don't see any pluses yet, but if you ever experience such thing like entering the trade and you didn't really want to do it, but your hands just went and opened it out of reactivity, just type plus into it, okay? It's anonymous. I promise not to announce names. Okay, so psychology, it's very, very important. If you ever want to learn a little bit about psychology of trading, there's a lot of books, and there's one thing called Trading in the Zone by Mark Douglas. He's not with us. He passed away a while ago, but he was big about psychology and trading. And that's very important. But I just heard somebody saying an amazing thing also, because then you can totally start focusing on psychology and neglect your building your skills or improving your skills. So one of the guys, forgot his name, he said very nice thing. He said psychology of trading is very, very important, but you can't just focus on that. You need to come up with a good plan, with a good strategy, with a good way, the good edge for your trading, and then you apply it, and then you work with psychology, because psychology is something that prevents you from doing the right thing on the model that you have, right? Just purely psychology, it's not going to help. You need to combine it with skills. Okay, so these are the questions. I think we're doing great, and I still haven't received. I appreciate that you're listening nicely, but I would really love to get questions from you. And again, I see some people coming after we started, so welcome first of all. And I would like you to participate and type your questions about specific instruments. Could be individual shares, it could be index, could be commodity, it could be currency pair, anything that's tradable, indices. Just type your question and we'll discuss that, okay? So again, we're about 25 minutes into the webinar. I hope these questions and answers made sense to you. And now let's get to work. And also, please keep in mind that people that are going to be watching this on YouTube, they have no luxury of asking questions. So definitely we will need your assistance to ask questions and think of those people so they can benefit as well, okay? So I'll give it a few more, I guess, half a minute, few seconds, so I can start receiving questions. And if I don't receive questions, that's also fine. I don't prefer that, but this way we'll just limit this webinar with the questions that we went through already. So please take advantage, type your questions. I'm here waiting for your questions, okay? I'll give it a few seconds. Okay, Theo, thank you for your question. So Theo's asking, how about trading currencies and holding positions for some weeks? Trading mostly economic of countries. It's up to you. Or you can hold it for a few seconds, or you can hold it for a few weeks, for a few years. That's fine, as long as it makes sense. Especially when you trade for longer term, you have to take into consideration that you have overnight swaps. So if your potential profit is way, way higher than the swaps that you're paying daily, overnight swaps, that it makes sense. Also, it has to make sense fundamentally and technically. You know, if you know something, especially if you know your current currency and you know about something upcoming, like we had something recently in South Africa with interest rate and inflation, or Japan. Japanese yen with the Central Bank of Japan. That was a big story. They were sitting for years in a negative interest rate. Then the moment they raise the interest rate, the yen start moving. I'm just going to show it to you. So yes, in this case, when the trend changes, it makes sense. You can sit. Let's just take a look. You see, this is where the Japanese yen started to reverse, and this is a weekly chart, June 30th, and it went straight until July 28th, the whole month. So 4 weeks of intense move to the downside of dollar against the yen. Then a small correction, and then we went to another level. So if you take from the beginning of the move, of course, it's easy to look back. You know, you don't see these things only after the fact, but let's say if you anticipated this move and you took an action beginning of July, and then you said that you're going to be holding until 140, it took you the middle to September. So that's 2 months, 8 weeks holding. And the same thing when it turned around, you saw that it's holding here, then you could have held also for 8 weeks. Again, hypothetically, who knows? You could have probably gotten out here, or even holding until now. So it has to make sense. It has to have a fundamental reason. It's good if you combine it with a technical reason, and also take into consideration that you're going to be charged overnight swaps. So it's adding up every day, right? Good question. Sometimes people make a lot of money just holding, or some people holding cryptocurrencies from 70s to 90s, right? Or there are people that are holding Nvidia, or at least were holding Nvidia for a nice run, or Tesla, or currency pairs. It doesn't matter what it is. It has to make sense to you, right? Good question. Thank you for your question, Theo. Okay, guys, do we have more questions? I have a very nice audience here, but it looks like you guys are very passive. I don't mean to judge you. Let's do some job, all right? Just type your questions. You take that questions window, you come up with the question that you'd like to get the answer to, and type it in. I'm going to give it a few seconds, okay? So how does China's stimulus affect the dollar and the euro? I really can't tell you. The stimulus, first of all, reacted or affected the Chinese market, and it affected those four assets that I share with you, which is copper, oil, Australian, and New Zealand dollar. Okay, how did it affect dollar? I think dollar was more sensitive during this time to the 10-year yields, the treasuries, that pushed the dollar higher at the same moment. Okay. Mr. Elias is asking, hi Simon, what's the impact of employment and unemployment data released on currency strength and weakness, for instance, USD today? Okay, good question. So employment data, it's part of the three major aspects that the Feds, especially there is a group of central bankers, and Jerome Powell is the chair of the Federal Reserve, right? So they make decisions, including the interest rates. So in their decision, as you know, since 2008, we had they decreased and took it to zero, the interest rate. And then as we recovered, things getting better. So they're starting to cut rates now, okay? Because then we had, after the cutting the rates, they've raised the rates, and now we're going back to cutting them. So it's a cycle of cutting the rates because the inflation was super high. So to fight the inflation, they used few instruments, and one of them is lowering the interest rate, right? Actually, I'm confusing myself because I'm a little bit tired. To fight the inflation, they raised the interest rates, right? Now, as inflation is stabilizing, it's getting a little bit lower every time. Also, they already lowered the rates. Once we had a 0.5%, then another quarter. So we are scheduled for the 18th of December for another interest rate cut. That's the plan. And the probability of it, according to CME tools, it's about 50-50. So how does it affect? In their decision in cutting the interest rates or not cutting it, they use three major things: the way the economy is doing, the way the inflation is acting, and the third one is something that you mentioned, which is employment data, because they're really trying to keep that safe as well. So that's the major report comes on the called NFP, non-farm payroll. Usually it happens on the first Friday of the month. So they report few things: how many jobs were added, what's the unemployment rate, hourly pays, and other things. So that's markets reacting to it very, very strongly. So usually what's happening here, it's a little bit confusing because normally the good or lower unemployment and more jobs adding would be a positive thing for the market, positive thing for dollar, and so on. Now it's very tricky. It's been very tricky for years now because as long as the jobs are not so great, so the Feds are acting in a different way as opposed to if the bigger jobs mean the inflation could be still higher, and then would push them to cut the rates again. So you can Google and go into more into economics of these things, but in general, the employment data is very, very crucial. As I said, it's one of the three major aspects that the Feds are watching. Okay. Now another question. You said unemployment data is one of the three. Okay, so I'm going to repeat. Yeah, one of the three. So employment is one. The state of the economy, this is how the economy is doing. One of it is your GDP number and others. And the third one is inflation. So they look at the CPI, PPI numbers, and also other aspects that they see how the inflation moving, which way are we getting decreased on the inflation? Is it stubborn and not giving in, or it's increasing? So those three, again, you have inflation, you have employment, and you have the state of the economy, how the economy produces, how the economy of the U.S. economy is doing. Okay, those are three. All right, good questions. Guys, we still have time. And I didn't get any specifics on specific instruments, which is exactly the topic of this webinar. So any specific markets that you'd like to discuss, you still have time. We'll give it a few seconds. I hope that you type your questions. Anyone? I guess not. Okay, guys, I know you're probably tired as I am, which is not an excuse, but I'll let it go this time. Okay, have an amazing evening. Thank you for your questions. Please try to be on time next week, and all the best. Take care.